Hey, it's Clay, and this will be a video chart on ticker symbol AVEO. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like to do this time frame, and does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. Did this analysis on Wednesday, so that is where the green line there is coming from. And overall, let me take a step back. It really depends on perspective. What do I mean by that? Well, if you're some sort of day trader flipper and you bought somewhere up around there and you wanted to buy and sell within 10 minutes, then yeah, from that point of view, the chart looks really bad right now. If you care about the big picture of things, don't get me wrong, things are looking a little bit shaky here, but the price does still have an opportunity to build that higher base. And what I'm going to do to kind of illustrate this a little bit more, and I talked about this in a sense, but I'm going to, adjust this area of support down here a tad. But I would definitely consider down here at 67 cents, the must-hold level. Why am I being so dramatic with must-hold level, do-or-die level? Well, let's just think about it. I'm not saying this is what's going to occur, but just to kind of justify why I'm being a bit dramatic. But if the price were to go down to 67, break down below it, and worse yet, continue to separate to the downside, what would you have at that point in time? You would literally have the price essentially right back to where it was before that big old move happened. And not to insult your intelligence, but price movements that go back to where they were, not exactly a sign of true power or true strength or anything like that. Again, I'm not saying that'll occur, but that is why that 67-cent mark is very important because, yeah, you don't want to see the price going back to where it was. Whereas let's say on the flip side of things, the price does go down to that area, and basically history repeats itself like it did right there. So it stabilizes and then starts to work its way back upwards. What would you have in this instant? Well, you'd have a set of lows right here. You'd have those lows down there. If you visualize each one of those as stair steps, well, hey, now you still have stair steps progressing in the upwards direction, and that's what a truly strong move is going to do over time. It's going to make progress forward, and again, in this situation, I'm just defining and quantifying that progress point as 67 cents. And another way to look at 67, it's kind of like a vocabulary definer, meaning it's telling us is the price, quote-unquote, going back to where it was, that being bearish, or is the price, quote-unquote, making progress, that being bullish. So yeah, let's see how this one closes out the week with 67 cents tomorrow on Friday. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.